the money didn't start to come in until someone who isn't me or anyone I know figured out how to spoof the market, which was basically posting like fake bids and offers and moving the stock around. And this was something that Swim, which is short for someone who isn't me, learned from the market makers. Goldman Sachs at the time and Barclays. This was how they were fulfilling an orderly market, and they were also making a profit on as a market maker. So Swim learned the technique from them and was able to master it. And on some stocks, Swim was able to move the stock around, 30 or 40 cents if the stock was lightly traded, or on like a large stock, you could move it as much as 10 cents. Swim remembers one day where he made $4,000 on Verizon, moving it up 10 cents, moving it down 10 cents, moving it up 10 cents again, and making $1,000 each way, within 3 or 4 minutes of the opening bell. And this was something that was a gray area at the time. There were no laws against it, but it is something that's illegal now. Our company was actually investigated by the OSC at the time, and they didn't find anything that was illegal at that particular time. With that said, when you're spoofing the market and it doesn't work out, it is a big fucking problem, because you are posting all these fake orders on the bid and pushing the stock up. If someone decides to call your bluff, they will buy out all of your shit. So now the stock is 30 cents away from where you want it, and you have all your buying power invested, and the stock is most likely moving against you. So Swim remembers one trade where he was spoofing a stock. He got called out, and he was immediately down $50,000. Okay, what could he do except close his eyes and pray? He did everything you're not supposed to do in a trade. Opens his eyes a minute later, and he's in a $2,000 winner, because the guy who called his bluff realized that he was not going to punch out and got nervous himself and puked back up all his shares, and Swim was able to get out with a winner. That is the kind of crazy shit that would happen every day. And every time Swim or someone was spoofing the market, he would always be worried that you would be taken out like that. So it was basically like you'd make 400 trades a day, and it's like the money's sitting in the middle of the road, and you have to go run and grab it before you get hit by a car. That's how it felt. And that was sort of the reality. It was absolute madness. With that said, no one was actually being victimized by spoofing. Basically, the only people who were losing money would be other day traders who were trying to do the same thing. Okay, the old lady who bought the stock for her retirement is not going to sell the stock 5 seconds later or 3 seconds later, and a fluctuation of 10 cents in the price is completely irrelevant. Really, the only people that you're playing against are other day traders who are trying to leverage every technique and everything in the book. This is nothing like, Jordan Belfort and Wolf of Wall Street, who are just like monsters, guys who rip off old ladies of their retirement funds on fake stocks. We were nothing like those guys. This was just pure meritocracy of trader versus trader, and, only the strong survived. So let me break down for you what the end of my run looked like. I was making some insane money for a while, but, around 2006, the NYSE moved to a hybrid market, and the specialist no longer had full control over the stock. And all of the guys who were trading NYSE, myself included, completely lost our read on the stocks. And the stock started to move more like NASDAQ, and all these algo traders and flash traders, the guys that you've read about recently, started to take over the movement of the stock. And they were really manipulating the stock, but with these insanely fast executions. they were moving their hedge funds closer to the NYSE so that they could have, they'd be milliseconds faster than we were. They had all kinds of algorithms going off all over the place. So we completely lost our ability to read the market. And once the hybrid market happened, there was basically 6 months where I could not make any money before I finally said, this is enough. And I told my manager, I said, look, I'm going to go home and I'm going to work on my trading system, and I'm going to come back when I have a system that works. And since I started, I was trying to build a trading system because I hated the idea of not being able to see consistent returns in my future. Like I told you, I'm not a degenerate gambler. This is where I was different from most guys. I've always been a businessman, and I hate the idea of losing money. So I wanted to build something that was going to be consistent. And my manager said okay, and I gave it another 6 months at home trying to build a system, but I couldn't do it. And eventually I just said, you know what, it's over. I had to run, and that's done. And that's what happened to pretty much every guy that I was trading with within a year or two. It also didn't help that the exchanges started to see how much volume we were doing, and they basically tripled the fees for intraday traders, and that pretty much priced our strategy out of business. So before, an even trade would be a small loss, but now an even trade was like a big size loser because you were paying for all the fees. And you had to, and even if you made a cent, you made a small profit on the trade, you'd still lose or break even because of the fees. So, our micro arbitrage, our micro scalping strategy was pretty much done. Add that to the fact that we couldn't read the stocks anymore, or at least the NYSE stocks, and that was it.